right?
Exactly.
So I wanted to start off with something that's, acting pretty good. And that's the Aussie. Okay. Can you guys see my Aussie?
Yep, got it, mate.
Okay. So, on that last surge in the Aussie, this is a big falling wedge. Okay. And when the dollar made a new high the other day, we had a throw over on the wedge, and then intraday we started trading above it and then held it on a little pullback. So it's back inside the wedge and really has the nicest and strongest uptrend. Been talking about the strong RSI structures that even when they clobbered it, we did not confirm. It's above 30. Aussie looks pretty good to me. I know you could throw your charts out for a little while, depending upon the reaction to the consumer pain index. But what are your thoughts going in, Ryan? You like this Aussie?
Yeah. I'm still not keen to be long it.
Okay.
Because as it's shown, it keeps making lower lows, all the way through the month, and lower highs. So it's got a, you probably could stick a trend line across the tops there.
Yeah,
a bit of guide, but your moving average there is doing the job well enough.
Yeah, here's a real big long-term line is off the highs all the way up at 76, but I'm sure there's a shorter term, sharper downtrend coming off in here that it wouldn't take much to get through. So
that's the thing, isn't it? I mean, you look to that shorter time frame and you think, right, well, I know my key level is going to be sort of 68, 69s, that sort of thing. But when you zoom out and see what those levels mean in the bigger picture, it's all small steps. To get to 68, you're talking about, if you're lucky, you might get to 68.50. Compare that into the longer downtrend, it's still a nothing move. And that's the problem we've got at the moment. These trends are well entrenched, aren't they?
Yeah. So every market bottom starts with short covering, just like every market top starts with long liquidation before new longs come in. So yeah, the first stage of it is squeeze the shorts out, right? And then then you get on pullbacks if you're getting professional support when dips are being bought after the fact, and that's when longs begin to. It's a process. You don't turn a battleship around in a day or two. So
no, exactly.
But anyway, I would
you got
say
a bit of confirmation there off that lower trend line. It had a break, then it held as resistance. Now it's back as support again. It's those little clues that give you your trading levels. You're not going to buy it here right in the middle, but if you get a test and hold of that, what is it, 65, 67, 50-ish, 45, 50-ish.
Right. Yeah.
You get another test and hold there, that starts to confirm and solidify the support there, and that's what you lean on, and if you want to go long, that's where you try your longs.
When Blake started talking about generational lows, the reason that I like Aussie and I want to get everyone else's impressions is when you look at the weekly. Okay, well, maybe the weekly because I don't have enough, but okay, monthly. After this big move, comparatively, the dollar's taken out this high, right? The COVID low, dollar's taken it out, right? By a ton, right?
Yeah.
And euro has taken its COVID low out. Pound hasn't quite done it, but the fact that the Aussie looks mainly corrective and has had the most relative strength, held up the best during this whole huge dollar rally, I think is a market message.
Yeah.
Bingo.
Is that the market message?
Welcome back. It is. I think it is.
Okay. Well,
but I just wanted to say I think you're right. You're spot on, Dale. Anyway, good morning. I'll let Ryan in.
Good morning. Hey, I saw you on a pirate ship. You and Christian or Roman. I'm not sure who you were with. But
I'll talk about that later. You guys, you guys continue on.
I thought you were a Marine, man. All of a sudden, I see Blake on a pirate ship. Anyway,
I have a buddy who's a sailor. All right, be back.
All right. So I want to bring Kman in on the yen.
Good early morning, Dale. Good morning, everybody.
Good early morning, Kay. So you called this resistance very well, and you covered it, which is just a little scalp. And I believe we talked about if we had a hot number and it pushed to new highs, that you might be considering attempting shorts again.
Yeah, I'm.
But that was yesterday. I mean, everything, we can change our minds quite a few times.
I'm actually relatively spectator right now in the yen, and because yesterday again, and I was talking about this. Well, call it a divergence or a mismatch between what was happening on the equity markets, the commodity markets, and the yields, with was what happening on the yen, and then we had the correction.
Yeah.
But I find it, if you look at, for instance, Aussie yen had a quick drop actually from what could possibly have been a breakout of a triangle, and it dropped back down to the bottom end of the triangle, even a little below, and we are back. We are right back to it. The elasticity of yen pairs is still very high to strike back from lows. So I'm a bit in doubt. I don't know if I really want to be short long yen a lot before next week BOJ.
Okay, I mean, I look at Aussie yen, and what do you think I see? I'll open it up to our attendees and to the team.
Well, there was this triangle from the 96 and a bit highs, and then from the corrective lows up there, and then but one could always also call it like a bull flag in a way. If this starts to go back above call it 93 quarter or half, we could easily get back to the top end of it, which is
about 98.
Yeah, could be.
Because Jay's has got it. I'm it gives me satisfaction. They don't always work, but I don't know, numerous people have picked up on 3 drive setups where the first drive is a confirmed high and the second high is a divergent high, and then you get a 3. You just connect these lines up here. Yeah. And if this stays under 70, you have a possible reversal formation. And I call it a 3 drive. Ellioticians would call them ending diagonals. I didn't know that till I started working here, and saw Grega calling these formations ending diagonals. So anyway, looks like 98.
I just call it the yen is getting trashed again.
Yeah.
But I heard you talk about satisfaction. Did you celebrate the Stones 60th? Yesterday.
It was yesterday?
Yeah. Rolling
Stones.
No,
because I have old timers and I forgot about it. So that's a problem with holidays. Once you get up here, you forget them, or you think they moved them on you. No, but you were a Stones fan?
I am.
Yeah, so I know guys that have seen them 10 times, and I like some of their music, but I wasn't like a crazy Mick Jagger fan. But I was more of a Led Zeppelin guy. How about you, Blake? Hey, Stel, how are you, buddy?
I'm good. I saw the Stones live in 2004, and I was thinking at the time, man, they're old. I mean, how are they still playing? And they're still going.
I know, that is amazing. I mean,
so then they sobered up after that.
Well, I think about Kman and I like that in the training industry.
You guys have heard the joke. You guys have heard the joke which says, sometimes I really wonder, with the things that happen in this world, I really wonder what kind of a world we're going to leave to Keith Richards.
Yeah, nothing will kill that guy. Yeah, I want his transfusion. Anyway,
I celebrated my 40th in markets last year.
40th. Okay. I'm not going to tell you. Anyway, so Stel, did you get executed on your long in silver?
I got executed. I got filled. Yeah, I don't like
filled,
the word executed. Yeah. So I'm done. And I've been waiting for this for months and months, right? You've been here.
Yeah.
You've been listening to it every day.
Yeah.
What is he showing? Oh, it's a ticket
The
from
Stones.
the Stones. Nice. Nice.
Yeah.
We were very lucky to grow up.
1995.
Our generation came in. We had the best music.
1995, man.
Yeah.
Wow.
Yeah. So you're long.
I'm long full size, and I'm
Okay.
happy about it. And
Okay.
a few years from now, I'm going to be telling my kids I got long below $19.
When silver's 250.
And they're going to say, I don't really care.
Yeah,
about
actually,
that.
hello, Blake. Actually, there's
Good
a
morning.
friend of ours is asking. Well, let me find the question again. Hold on. Does your team believe the hype about gold and silver replacing the dollar? No, I don't. Especially based on China and Russia creating other currencies. Why is Stelios buying silver, not gold? I look at the gold-silver ratio. I think both metals are going to go a lot higher eventually, but at these levels on the gold-silver ratio, I really, really, really like silver, which also has huge industrial application, etc., etc. We've talked about it at length.
Yeah. Yes.
So yeah.
Okay. And they're not building new silver mines, are they?
No,
There's
if
not a lot.
when the ratio goes back to 40 or 50, I'm going to switch back to gold and so forth.
Okay.
Okay.
Yeah, that'd be a hell of a move. That'd
It
be
will be.
$30, $40 silver. Copper. Okay. So, the other day it looked like it was going to, it was one heck of a rally here. I think it was like 4%. But look at this. Just in case you don't believe the theory about confirmed lows, normally you got to bounce. You can get bounces from down here. The point is that it's usually not the low. It's only a temporal low, because most lows happen not with price confirming, momentum confirming price. So now we're not. Okay. So maybe something setting up. I call this drive 2, but you can tell there is glaring divergence now. So anyway, everything we say in 18 minutes, will be, like blown away by a leaf blower. Who invented leaf blowers? I want him hung. Anyway, Blake.
Hey, good morning.
We missed you, man.
Good morning, team. You know what? I can't say I really missed you guys. I can't. Honestly, I was in San Diego. It's the most beautiful place on the face of the planet that I've been to. Minus now, I say some of the Greek islands are pretty damn cool, but San Diego
climate, Mediterranean type climate.
Yeah, I mean, it's just awesome, and my friend's on the water, so like his golf cart drive away from the pier, so it's it's just a beautiful part of the United States, and it's my favorite part in the United States actually, and so it was a really nice visit. Spent a few days away, and so it's nice to be back. And I actually I was my positioning has been small for the last few weeks. I've been trying to buy some dollars, or I'm sorry, sell some dollars, with the euro, up around the 101.50 level, and I got stopped out actually on a small position, and I was stopped out of like the Swissy, but you were talking about the Aussie and the Kiwi, and you're right. They actually still look pretty darn good, and those are the ones that the only ones that I've added to since I started kind of nibbling around the last couple of weeks, and so those if you look at the Aussie dollar, we're really holding this channel, and you're right, Dale. We're at we're not. We haven't sold off a lot compared to what's happened in most other currencies. And so when you look at the Aussie dollar, I really don't want to be long if it drops below 67, which today it possibly could. I mean, we've got probably the most important number that the market's looking at. Now, I don't necessarily think the CPI data is going to be hot today. I actually think that it's going to come in a little bit below expectations. If you guys haven't been watching, commodity prices have been sliding almost across the board for the last several weeks. So I think that we're going to start to see CPI come off a little bit, and it's going to be, it's going to be better for stocks. Stocks are going to cheer that. You're going to see the dollar pull back, and you're going to see the Aussie, probably rally back with risk. And same with the Kiwi. I think the Kiwi has acted a lot better than other currencies. And Dale, you pointed this out earlier. The euro is below. We are trading at levels we haven't seen in 20 years. And we actually tested parity the other night. And sterling's trading well below 120. The sterling's at levels we haven't seen since early 2020. But you got the Aussie's actually holding up pretty well as well. But I guess I could point out that the Aussie is still, I guess, around getting close to like a breakout point here. And this is that generational move that I don't think we'll see again, in like a 20-year cycle. I don't think the Aussie's going to see those levels again. I don't think the Kiwi's going to see these levels. And you even have like currencies like the dollar Canadian that have really struggled against these highs at 130.85.
I'm so surprised they didn't take the stops out above those.
Yeah, me too. I was watching from afar while I was out of town this week, or the last few days. And I thought, the dollar Canadian would have ripped through this 131 level. I wasn't trading. I was just kind of watching it. And I'm surprised that it hasn't either. But, you even have currencies like the dollar MEX, which I still have exposure to. It's trading really, really heavy, considering what's happened with risk aversion and the dollar just as a whole. So I think we have some really good setups for today. Like I said, I think the CPI data is going to be, I think the risk is that it comes in a little light and we see stocks recover. We see the dollar pull back. And if you look at the dollar index, the dollar index has really, broken higher on above wedges. We've seen the channel resistance break. It's beyond, fib confluences. The dollar has been so damn strong, but relative strength is still divergent, any which way you slice it. So it'll be interesting to see if the dollar can build on these gains. And you asked Ryan a little bit earlier if he's gotten long the Aussie dollar, and he said, plainly it's still hitting lower lows, and you have to look at the dollar index. The dollar index is still hitting higher highs.
Did you hold that low, that euro long from yesterday, Ryan?
Yeah, I'm still in it.
Okay, so he bought it very well yesterday for this.
That's cool. Good job, Ryan. I said, I picked mine up early. I bought it last week. I actually picked it up a couple of times. I've traded the euro kind of poorly over the last, but fortunately I'm just kind of nibbling around. I'm not like getting aggressive. It's hard to get aggressively, like if you're out there, selling dollars and you're adding to, losing positions. It's a dangerous game when you have the dollar index continuing higher. What if the CPI data comes out hot today?
That's what the White House is saying, Blake. While you were gone, they put out a statement saying that it could be escalated. It could be a high number.
And I saw yesterday that there was some inflation data that came out, the CPI press release that was like fake or something.
Yeah, it was a fake report showing it coming in at 10.1 or 10.2% or something, and it got dismissed. But it still caught the market off on the hop a bit.
Yeah, it was like at the end of the day, I was driving and coming in from San Diego, and I saw something, and I saw stocks that were sliding at towards the end of the day, and that was it came in at what did it come in at?
10.
I think 10. It was something saying it was 10.1 or 10.2%.
Oh my God! But could you imagine if that happened for real? Honestly, for real, the euro would be trading below parity. And if you're sitting there, adding to dollar exposure. You're fading the dollar, and the dollar index could be a lot higher on a print like that. Like in all actuality, right?
Yeah, but yeah, I mean that would be an outlier. If you're looking for a big beat, obviously something 10%, even 9.2, something like that will be a big beat. And it's going to take a big beat. And as Stel mentioned this morning on the flow show, the price risk going into this number is a miss rather than a beat, unless it's a big beat.
So let's just if you just take a look around. I mean, the what we're seeing in the markets is we are seeing like not deflationary. Deflationary, it's way too early to start saying things like that. But we have disinflationary. And data things that have been showing up. I mean, if you look at nat gas prices are coming off now. I don't know what's happening in Europe, but I know it's going to be probably a pretty gnarly winter. I get that, but if you look at just a lot of copper prices across the board. Here's wheat, here's soybeans, here's corn, here's cotton. I mean, this is, and you got, you've got, crude oil's come off quite a bit over the last month. I mean, we probably have seen the peak in CPI. So if you guys are running around thinking that, here we go, we're gonna have much higher levels in CPI from here on out, I would argue that point, and I don't think that that's really going to be the case right now.
Well, the numbers we get now are lagging. So they go
back
probably.
This is correct. That's why I think that today's data is probably not going to be a beat, but from here on out, we're going to start to see data really come off. So, and here's crude oil testing the 200-day moving average, really important support here. So with that being said, be careful of how you react, even if the print is, let's say it's in line. I mean, let's say, CPI data comes in, close to expectations. You probably want to be buying risk into that or selling the dollar on any spike higher if it comes in close to in line. Anyway, I'd love to hear you guys' thoughts. Kman, Stelio, Steve, I think Steve's around. Ryan, what are you guys' thoughts about today's release? And Dale, what do you guys think?
I personally think
we've got the BOC as well coming up, so it could be looking at something like the Loonie, you're going one way on CPI and another way on the Bank of Canada.
So okay. So what? But what do you think is going to happen with CPI, Ryan?
The number will come out and the market will go bonkers either way.
Okay, so you don't have any expectations. Okay.
Like
I think data,
it'll be hot.
Okay.
I personally think if it comes in line, markets are going to trade as if it's a miss. I've said it. I said it before earlier today on Flow Show. I think the market's going to move more on a miss than on a bait. Obviously, unless it's a huge outlier. That's my view. So for if you're long the dollar going into this number, you really want a strong, a pretty good beat on this expectation.
All right, Kman, you have any opinions? Because we all have belly buttons. We all have opinions, right? So let's hear yours.
We have to look at what the yields are doing and the differential between the real and the core CPI as well. If the real CPI comes in even with a small beat, but the core CPI comes in lower, I think one may cancel the other for the immediate, but they will probably put longer end yields lower, the curve deeper into inversion, and that might weigh on stuff like dollar yen, for instance. So we may have like a double saloon door reaction on the data, in my opinion.
By the way, this dollar yen has been just crazy bid. I sold a little bit last week, like right here, and I put my stop right above this triangle resistance, because I'm like, oh, we're coming out of a wedge, we're in a triangle, we're probably just gonna roll over here, and I took a small position. I was just gonna get kind of aggressive down here if it broke down below this. Yeah, that didn't happen. It just went I did not expect it to go straight back up again. So anyway, that was a shocker to me when that happened over this weekend. I was like, what? Anyway, Dale, what do you think, Mr. Belly Buttonless person?
Yeah, Blake, honestly, with all of these numbers and stuff, I really don't care. I'm just looking to trade the reaction.
Okay.
So I come in with really, I think, on a guessing game, I think the number will be hot because it's lagging. And I don't think the crude numbers are going to show up in this. Gasoline dropping 30 cents will show up in this reading.
All right. Okay. Well, and I think that's probably why you have to go with what Stel was just saying is any release is going to be treated like a miss just because people are going to look ahead into the next CPI reading. Steve, I know you're lingering around here somewhere. Good morning. Are you here?
I am here.
Any opinion about CPI today? I'd like to hear your belly button.
Steve. Sorry.
What the hell?
Stelios thought he was in as a fraternity days again. But,
I've said what I had to say the past few days. You know that I don't like to speculate on numbers, although in this particular case, they've even given us a heads up for a hot number, right? Now, I don't disagree that, it will have to be a big outlier for the markets to move on even higher inflation. Most probably that's going to be the case. I agree on that. Now, how much does the market react to it? I'm afraid initially not much. I think that the risks are tilted for some kind of a retracement in the dollar eventually, right?
Did you say a replacement for the dollar?
Retracement.
Oh, retracement. I was like, yes. So I think that's probably what we're looking at, following the release. Yeah. And all right, Steve. We'll appreciate your thoughts. Tony had asked about like the Nasdaq, and I think the Nasdaq, like the S&P as well, is like consolidating in a. You can see the S&P is doing the same thing. Triangle type of consolidation and a descending channel. So even if you get a hot release today, Tony, I'd look for a break below this triangle and then a reversal. And if you're looking for, if we get a weak read, the Nasdaq might challenge the top of that triangle and look to go higher here. So if you want my opinion, any other thoughts, last minute thoughts before we have this release,
hey, Blake.
guys?
Hey, Blake.
Yeah.
I'm here. How are you?
Who?
Gregor.
Who's that guy? I'm just kidding. Gregor, thank you so much for the week ahead video. Good to see you, man.
Hey, man.
Or hear you.
Yeah, actually, I would be looking for, if inflation comes down, I would be looking for dollar yuan top with the wedge. We have some wedge here playing out from on dollar yen from June 15. So I think that there is a chance if the 10-year US notes really would rally that this market could come very nicely to the downside. So it all depends on the data. Otherwise, I would stick with euro dollar weakness. If inflation remains as it is or even jumps higher, then I think that euro dollar will see more weakness, but after a rally for potential shorts.
All right, Gregor. Well, nice to hear your voice. I didn't see you in the list earlier, so glad to have you here. All right, so we got data coming out in how long, Stel?
About 30 seconds.
All right.
Can you guys please promote Dana Lyons, our guest?
I'll do that.
Thank you.
Just so you guys know, and I'll put the yen. Well, here's the S&P first and foremost. It's a 15-minute chart. There's the euro. We're gonna put it on a 15-minute chart, and actually, I think I'm gonna put it on the yen. Oh, euro's.
There it goes.
Whoa, we must have got a little pre-release here. Did that data come out?
Yeah.
No.
Not yet. 10 seconds.
Oh, look at stocks are ripping.
Okay,
People must know.
Look at the euro.
Yeah.
Somebody knows something.
Somebody knows something about something.
Always the case.
Wow.
Oh no.
Wow.
9.1.
No, it's just somebody going for stocks.
It came in at 10.1. We're at
Wow.
9.1.
Wow.
9.1.
The core is higher.
Wow. 9.1. Wow. Look at that.
Oh my God.
I mean,
There's a few mails going out there.
Someone just
Somebody
got
really
religious and said,
ramping
"Oh my
for
God."
stocks.
I mean, stocks are just absolutely getting crushed here. I mean, you know, if you guys were like, oh, you know, I'm going long stocks and I'm going to sell dollars, I mean, you're getting destroyed right now. Oops.
By the way, I'm trying to promote.
Dane Alliance.
Yeah, I've done that twice, and I can't seem to.
Maybe
Yeah,
Steve can hook you
I
up.
never can. I've brought this up like for months.
Yeah, Steve, can you do that?
Someone
It's
has
weird.
it locked.
It's weird.
It's not. Nobody has blocked.
You
nothing.
have me locked
you can
out.
you
man.
can take off the tinfoil hat. You can.
I'm staying in my pyramid.
You can promote somebody 1 billion times if you want, but unless
Well, how
they
come I can't? Stel can't.
but unless
it said decline.
Hey guys, just heads up. Look at the S&P breaking lower. Nasdaq is breaking towards triangle support. A lot of support down here, guys. So just be careful if you're chasing this market. Remember, people are probably going to look through this, so I would probably be considering, you know, picking up some risk.
We're almost
here.
at new
That's what I
highs,
would
and
be
U.S.
thinking.
dollar yen came in.
Yeah,
What's that?
Watch euro dollar parity again.
Yeah, you watch the really. I mean, this is somebody will have lawyers on his door very, very soon, because that was like an absolute rampage before the number. It was absolutely incredible.
But the wrong way though.
Yeah, it's just to get the 101 stops out, right? I mean, what was the high on this move? I think somebody must have had, see, 101.03, the high. Somebody just went for stops before the number.
So watch, like I said,
actually.
watch the bounce and risk here. I think you're going to start to see, you're seeing like, you know, some of the dollar pairs are reversing. You know, like I said, everybody's going to start looking past this and say, okay,
why get a bounce in a risk? Sorry, I don't understand personally.
Oh, because people are going to look past this and say, okay, well, that was the
But
high
how
point.
can you look past? We have a Fed that's tightening and numbers that force them to not stop tightening.
Steve, look, I don't disagree with you. I think the market's going to look, you know, we can sit here and argue all day long what we think is going to happen or what's going to happen in the future. I just think that the stock market is going to look past it. That's what I'm saying.
Let's see. Yeah. Nothing is impossible with these markets, to be honest.
Right, but the S&P is actually hitting. It's still hitting lows. We're approaching the 618 retracement once again. Right here, which is going to be a 3750, which is also going to be pretty important. Did you bring in the guest?
Dana's ready.
Okay, then I'm going to let you guys go. Hey, thanks everybody for joining in today with ForexAnalytix. Make sure that you check out the Trader Funding Program, which is our sponsor of today's show. You know, if you want to learn how to trade our money and, you know, not yours, and, you know, take 75% of the profits and none of the risk. If you want to learn about that, click the Trader Funding Program or check it out online. And then I'm going to pass it over to you, Dale. So it's nice to be back with you all. And thanks, team. Really appreciate each and every one of you.
Nice to have you back.
Blake. Thank you, team. Ryan, Kman, Stel, Steve, Blake, Dream Team. Dana Lyons, Superstar Fund Manager. How are you, buddy? Welcome back to F.A.C.E.
Dale, how you doing?
Good, man. You want to share or you want me to share the screen?
I got it. One second here.
All right. So the White House was right for us to, you know, they put out a warning. Maybe they thought they'd take some, you know, the sting out of this number, but
yeah, you know, they're always going to do that. It's kind of like you know, companies pre-releasing or giving out warnings, you know.
Yeah. So are we in a bear market, Dana, or
I'm sorry?
Are we in a bear market?
Yeah, that's been our assumption for most of the year or all of the year, that we are in a bear market for stocks. And you know, if you look at just basically how stocks have been trading,
failing rallies
of late, it's textbook bear market behavior. you're getting.
You're breaking up on me. No, I can't hear you, Dana.
Capitulation. Hear me?
Yeah,
Dale,
yeah,
you got
but
me?
yeah, but you're fading in and out. I didn't
Okay.
hear you for a minute or so.
All right.
Yeah, it's like and then, yeah, it's a bad connection, bro. First time this happened.
Type readings on some of these sell-offs, but you're not getting that V bottom reaction. And
Yeah, Dana, we're going to have to try this again because I can't hear one word, and neither can our community. Can you guys hear Dana? Hit me up in chat.
He's breaking up for me as well. Yeah.
You're breaking up, Dana. We're going to have to do it another time because a minute will go by and you're talking to me and no one can hear you.
Yeah, he might try disconnecting and reconnecting. He might get a better signal from wherever he's at.
You mean log out, come back in?
Yeah,
try
that's what
that,
I think.
Dana. Try that.
Or at least so we don't lose him, he can try from his mobile phone through 4G network. He won't be able to share his screen, but we can at least talk to him, right?
I think he just logged out. We'll see. Let's give it a minute or two.
Yeah, let's give him a minute.
Live TV, man, you know, they used to do it this way.
Yeah, indeed.
All the mistakes and, you know, they couldn't edit it out. I like that. There he is. Hi, Dana.
hi, sorry about that. I guess I lost connection there.
Okay.
All right.
Well,
Let's get back.
let's see if the mic works better. It may have been a blessing. So.
All right. You
All
got
right,
me.
go
now.
ahead. Yeah.
All right. Well, what I was getting into was the fact that yes, we are in a bear market. This the stock market behavior we've been seeing is vintage bear market behavior, in that you get these sell-offs and washout type breath readings, and I heard folks talking about some of the washout sentiment readings. We're getting that, and yet we're getting no reaction to the upside off of that, which is vintage bear market behavior. You're not getting the V bottom type moves, those explosive moves off of those washout readings, and the enthusiasm back to the upside that we saw over the bull market over the last several years.
So yes, the value line chart that you're showing has already taken out the pre-COVID highs, and a lot of people in S&Ps, that's what they're looking for, about 3,400, the pre-COVID highs as a target and a fib. And
if you look at I would say from a technical, from a charting basis, about the only index that really hit some satisfying levels, if you will, in terms of technicals, was probably the Dow. The S&P is trying to hold here that 38 retracement from the COVID low. Not doing a very convincing job of that. So if we break decisively here,
3,500
20 level, I'm looking at 3,500, ultimately 3,200. Probably the most clarity on any index I would be looking at on a charting basis, the NASDAQ 100. So down around 10,600, 10,700. Good confluence of fib numbers at 61 from the COVID low. And if you scroll all the way back, we like to look at the long-term fibs as well as the 38.
So you think we'll get more of a rally from those levels, enough to really shake up all the bearish sentiment? We get down there and then we rip?
That would be my guess, because even a longer term, a secular bear market, you don't go straight down. You're going to have pretty sizable intermediate term rallies. So that would be the level I'd be looking at for an intermediate term low, decent rally, and set up, shake out the latecomers again for that next wave down. So
so you've recognized this, you said, from the beginning of the year. How does money manager, how do you, Dana, when the environment's shifting, do you reduce, get out of longs? Are there instruments? Because everything went down. There really wasn't anything except oil held up longer
Right.
that longs really paid off in that I can see.
Right. Well,
So how do you position your book?
right.
In
We've got
an environment?
yeah, we have a quantitative based risk model tells us, where the risk is. Is it, and a lot of it is based on breadth. So we want to determine are the majority of stocks going up or down, and then align ourselves accordingly. And as you recall, back in the fall, breadth started falling off the table, and November, December gave a heads up that the new highs and late in the year, early this year, probably weren't going to be sustained. And so we started, first thing we do is trim some of our longs, and then we start hedging. The more, as you mentioned, nothing really held up except energy stocks. And so the more we like to base our longs on relative strength. So concentrate our long portfolio in those areas that are performing best. And as the year went along, more and more of those relative strength longs fell off the table. So we got rid of more and more of that. And
how about there's been some rotation into biotech, which was getting hit and way before this bear market started in the general market. Do you see anything there like Lebu or anything there that hints of some type of bottom developing in biotech?
That's one of the longs, one of the few longs that we still have on, or that we recently put on.
I'm the amazing Kreskin. Do you know remember
yes.
who he was?
Yeah.
Okay.
That's you.
I have different glasses, but yeah,
here's the IBB. Bought it recently once it recovered some technical support. Just a small position because we are bearish on the overall market, and to be honest, we've been net short for most of the year. We're still net short right now. The difference is back in the first quarter of the year, there were still some longs that were holding up okay. So we had a lot of longs and a lot of shorts, very small cash. Now we're still net short, but very few longs. A couple short positions. We're about net short about 20%. But we have about 50% on in cash. I mean, about 50% of our portfolio is in cash. And another part of that is commodities were working great, obviously, the first part of the year. So we had a lot of commodity positions. We've been short bonds most of the year. Still have a small short bond position on. We've been long dollar all of the year. We're still long the dollar. Not a huge position anymore.
Okay, do you have any upside targets? I know you're not that type of trader. It's just all the technicals are bullish. But I mean, I'm seeing sentiment in the euro like 7% bulls.
Yeah, we'll we'll ride the trend as long as it lasts, which means we're not going to get out too early. But at the same time, when we see big reversal like we saw in commodities lately, we're going to take a little bit of drawdown on the reversal. So we had a good run in commodities.
Yeah, copper was
for
a
most
great
of the year on the sharp reversals. Yeah, we gave a little bit back, but right now I think it's a counter trend move in commodities. I think eventually we go back up. Right now, obviously the momentum is lower, so we're out.
It's going to take a lower dollar.
Yeah, probably will. Yes.
Yeah.
It'll probably be. Yeah. I think about the only asset that has not been in a counter trend move, basically the start of this third quarter, has been the dollar. So next upside target, if you will, would be up around 110 on the dollar index for us. So maybe around there we get some sort of a pause or consolidation. That might coincide with some kind of a bounce in commodities. So
yeah, the commodity currencies look better, the Aussie and the Canadian.
Yeah. So commodities in a short-term pullback, eventually I think we find a bottom and start heading back up. But right now, short-term momentum is lower.
So you don't have to answer this question. We're halfway through the year. I know you probably have different funds, but what's your average ROE in a period where most people are down pretty good.
So our model performance for the first half of the year, we were down, but somewhere in low single digits, around that 4 to 5% down. So a lot of that, and the majority of that, to be honest, was occurred in January. So we were down 3-something% in January, right when we were still holding, like I mentioned, a lot of those relative strength longs that reversed sharply in January and took our lumps there. But most of the rest of the year, we've been just about break even for our model portfolio. So, you know, and like I said, right now we have about 50% in cash. So we've got a lot of ammunition ready for, you know, when opportunities present themselves. There aren't a lot of great opportunities right now that we're seeing. We're kind of seeing a lot of, you know, like I mentioned, these counter trend moves. So which has put a lot of the assets kind of right in the middle of the near term range, kind of like the 10-year, you know. Long term, we are, you know, there's about a 60-year cycle in interest rates, and we think that bottomed in 2020. So we think in general yields go up for a couple of decades. You know, they're not going to go straight up. So right now we're in one of those counter trend moves as well. So on the 10-year, looking at
where's the 10-year at now? I'm working. I can't watch things.
You know, I'm not looking at it myself.
Okay. All right. I'll find out where everything is.
Let's take a look. Looks like 305 range.
Okay, because I thought it might try 320 for a right shoulder or something.
You're right.
But under 270,
275 was our 275 is good support.
Under that, it's going to 2.
I would not be surprised if we get down towards about 225, 230.
Okay.
By the time this counter trend move is over, I think that's the back up the truck level for us in reshorting this thing though. So we've got a small short position on right now. Still 230 we'll back up the truck on those at short position again and look for, like I said, years or decades to come. I think yields head higher.
Okay, how does all of this fit in with your long-term narrative that we were in a cyclical bull market but a secular bear? Do you have any idea? Is this the return of this is what secular means? So we're back to the real trend. The real cycle is dominating now, and the cyclical part is over.
I think so. I think it ended around the start of the year. So
or like a generational peak.
You know, it tends to coincide with the length of the bear market tends to coincide with the length of the bull. So you look at the bull market, which, you know, to be honest, for us, and we're not usually the type to, you know, explain away some of the market moves based on, you know, intervention like the central bank intervention. In our view, the 2000 should have been the top. Really, we had the bull market 82 to 2000. And the amount of excesses that were built up in the system. Bob Farrell, the great, the legendary technician, one of his rules was, and it mirrors, you know, Isaac Newton's rules of physics. Markets that go to excess in one direction always go to excess in the other direction. And we saw historic, we saw historic excesses in 2000 that by 2008, 2009, they had reversed mainly back down to about the mean, right? But that's not the extreme to the downside. Then we saw, you know, unprecedented intervention by central banks that in our view prevented that the natural correction that could have put markets in position for a longer term, more sustainable low. Since then, all we've done is built on those excesses on the upside again. So now we have prices, bills to pay for those 2000 excesses still. On top of that, we have all the intervention and new excesses that have built up since the financial crisis. So in our view, this bear market, the secular bear market, is going to be especially painful to the downside. And we still have, like I said, those bills to pay for the last cycle's evils,
Yes,
as well
that we
as
interrupted.
the current. Yes,
Right.
correct. So I don't think you can kind of necessarily permanently put aside those natural laws of markets or physics or whatever, however you want to term them. So I think it's going to be especially bad, especially considering the fact, like I said, we had a 40-year bull market in bonds. If that's over and we have, 20 to 30-year bear market in bonds, then where is there to hide? So you've had generations of folks and money managers that have taught and have been taught that, okay, bonds are the place that you hide out in bad markets.
Yeah,
especially
didn't work this time.
Especially for the older investors. Okay, as you get towards retirement or your older years, then
they got hurt worse. They got hurt worse than their equity.
If we're in a bear market in bonds, and that portion of the investment community is largely in bonds, and they're getting hit, like we saw in that 60-40 portfolio is down on track for its worst year record. There's going to be nowhere to hide. It's going to be very painful unfortunately for all kinds of investors, in particular those bond investors that have been taught, okay, I'm positioned conservatively, I'm ready for a bad market, and I don't think that's going to be the case, which is pretty.
Not during a sovereign debt crisis.
Right,
buddy.
Yeah.
Anyway,
I
I just wanted to show people your website here.
Oh yeah.
So that they know how to get a hold of you. The lion's share. Maybe I'll get a roar out of Dana before he goes. And so here it is. And your Twitter handle again, Dana?
Twitter handle is JLionsFundMGMT.
Okay. And lionsharepro.com, you could find Dana. And Dana, worked the bull market all the way. And maybe he didn't see it in January, but he's so disciplined that even if he felt bearish, he couldn't move until his model moved. So, you're going to have a hard time finding money managers that have experience in bear markets. So, Dana, how old are you now, buddy?
I'm almost 50, buddy. I got one more year and I'll be the big 50. So
okay, well, you're young, and but you've had experiences from 2000 and 2008, and you know what can happen.
I've been through bear markets, and I was raised by my dad was a pioneer in kind of the active management. Well, we used to call market timing, right? You can't call it that anymore because of Elliot Spitzer. Right.
Oh, yeah.
Remember him?
I do. Yeah.
But yeah, been built. I was raised on the thought that markets go up and down, not just up. So we're ready for both the two-way action.
Okay. So, I recommend that if you have a money manager, you interview them about their experience in a bear market.
That's right.
And Dana, always great to talk to you and get your short-term view, root for you and your people. And thanks for sharing your, sounds like you have a lot of conviction about what's going on and what's going on forward, and try and turn lemons into lemonade. Do the best we can here.
I appreciate it, Dale. Always great to be on your show. You guys do a great job. Keep up the great work.
Thank you, my trading warrior brother. Everyone, Dana Lyons, check out his stuff. Move your IRA to him. Forget about the old formulas. Now you really need an old formula, and most people out there generationally haven't seen this kind of stuff. In fact, maybe I haven't even seen the kind of market that we're going to have here. Maybe you have to go back to the 30s. Anyway, we'll see. Dana, thank you so much for shedding light and sharing your ideas with us today.
You got it. Thanks for having me on, Dale.
Okay, so that's a wrap, everyone. Hope you enjoyed Dana. Remember, it's only money. Go ahead, someone type it. It's only money. Come on, make it a little less important today. Anyway, go get some pips with the team in 20 minutes. Thank you, Sinatra. People thanking us, Dana. Okay, so Raymond laughed at it's only money. Anyway, it is, and who knows what our money will look like next year. I know guys are saying we're going to have a coin. So a digital coin. Oh my God. George Orwell, you must be doing cartwheels. So guys, have a good day.